Here are 8 news items from the world of the crypto industry. First, news. Experts predict a Bitcoin breakout by the end of September. Currently, the cryptocurrency market is moving in a bearish direction, with most cryptocurrencies recording losses. According to analysts, Bitcoin might break out of its 6-month sideways range from mid-September to the first days of October. Analyst Rect Capital linked Bitcoin's future dynamics to halving cycles and suggested that BTC tends to break out of consolidation 150 to 160 days after a halving. In 2020, it took Bitcoin 161 days to start a bull run that led to a peak at $69,000 in 2021. If this pattern repeats in the current cycle, BTC could make a major breakout by the end of September. However, there is another previously observed pattern suggesting that the expected rise might be delayed, as pointed out by other analysts. It is important to note that September is traditionally considered a losing month for Bitcoin, often referred to in the stock market as the September effect. Nevertheless, 2024 has been an unusual period for the leading cryptocurrency, as it reached a new all-time high of $73,800 before the halving in March for the first time. Despite this, Bitcoin's halving patterns could still trigger a bull run in the coming weeks. Second, news. Due to the downturn in the crypto market, Bitcoin has fallen below $58,000. Since the past weekend, the cryptocurrency market has seen a slight decline, resulting in Bitcoin's price dropping to $57,500. This has increased BTC's weekly losses to nearly 10%. Despite this, Bitcoin maintains a 54% market dominance. The second largest cryptocurrency by market capitalization, Ethereum, has fallen to $2,440, bringing its weekly losses close to 11%. In the last 24 hours, the liquidation of long Bitcoin positions on centralized exchanges exceeded $41.5 million, while the total amount of Bitcoin position liquidations reached $15 million. The entire cryptocurrency market witnessed liquidations exceeding $162 million, of which about $135 million were long positions. The current downturn was accompanied by a net outflow from U.S. spot Bitcoin ETFs, amounting to $276 million last week, according to SoSoValue. Data from CoinGlass shows that amid the decline, Bitcoin futures funding rates on derivative exchanges have turned negative, indicating bearish sentiment among traders. Moreover, Bitcoin miners' revenue in August reached a new low for the year. Rewards and fees brought them only $851 million, of which transaction fees accounted for $20 million. Third, news. The SEC warned FTX against paying creditors in cryptocurrency. The U.S. Securities and Exchange Commission warned the bankrupt exchange FTX of the potential consequences of repaying debts to creditors in stablecoins or other digital assets. The regulator stated that it reserves the right to question the legality of these transactions. It should be recalled that during FTX's bankruptcy proceedings, several options for returning funds to creditors were proposed, from relaunching the exchange to cash payments. Some creditors expressed their intention to receive their assets in cryptocurrency. Meanwhile, FTX, led by its CEO John Ray III and legal counsel Sullivan and Cromwell, rejected the idea of relaunching the platform. The management concluded that no investor would agree to invest the capital needed to resume the offshore exchange's operations. The SEC's objections included insufficient detail in the plan and uncertainty regarding who would be responsible for distributing funds in stablecoins. While the SEC's statement did not explicitly prohibit such transactions, the agency may challenge their legality, according to the document. The SEC does not express an opinion on the legality of transfers under federal securities laws but reserves the right to challenge transactions related to crypto assets, the regulator stated. Additionally, the SEC opposed a provision that would shield FTX from legal claims by creditors. Coinbase Chief Legal Officer Paul Grewal criticized the SEC's position. Grewal stated that the regulator should provide clear guidance instead of issuing warnings about the potential illegality of transactions. The lack of a clear SEC stance on digital assets creates uncertainty among investors and other market participants, the lawyer believes. Investors, consumers, and markets deserve better. Much better, Gruel wrote. According to available data, FTX plans to distribute between $14 billion and $16 billion among creditors. On-chain analyst Chain Mind believes that the return of such a significant amount is likely to boost the crypto market. Fourth news. August was the worst month for Bitcoin miners this year in terms of revenue. Compared to July, the figure fell by $99.75 million to $851.36 million, marking the lowest level since September of last year. Of this amount, fee income was $20.76 million, down $4.14 million for the month. A total of 4,289 blocks were mined during the month. The leading U.S. mining pool, Foundry USA, mined 1,248 blocks, accounting for 29.1% of the total, while the leading Chinese pool, Antpool, mined 1,074 blocks, or 25.04%. Thus, the leading pools accounted for 54.14% of miners' total revenue for the month. After the halving in April of this year, Bitcoin's price has been consolidating within a narrow range, and fees are at minimal levels. In August, a spike in network fees occurred on the 22nd when the Babylon team launched the mainnet protocol and allowed the first 1,000 Bitcoins to be staked. The BTC Babylon staking protocol is considered one of the most promising projects for scaling the first cryptocurrency's blockchain. It was created by Stanford professor David Say and previously attracted $70 million from venture crypto firm Paradigm. Once again, Foundry USA and Antpool benefited the most by processing blocks with high fees, thanks to their significant computing power. The network's hash rate is currently near record levels, but if the asset's price continues to rise, miners could continue earning high revenue. Fifth news. Authorities in 4 countries could crash Bitcoin's price in September. According to experts from Keiko, the authorities of the United States, China, the United Kingdom, and Ukraine may begin selling off their Bitcoin reserves in September. As a result, the price of the first cryptocurrency could approach $53,000. Keiko specialists provided the following numbers of Bitcoins held by the governments of these countries. United States 203,220 BTC. China 190,000 BTC. United Kingdom 61,200 BTC. Ukraine 46,350 BTC. Additionally, creditors who received the first cryptocurrency from the bankrupt exchange Mt. Gox are also considered a potential source of sales. Excess supply has been a hot topic in the crypto market all summer. The authorities of these 4 countries may become a source of selling pressure in the coming month, leading to a decline in prices, stated Keiko analysts Adam Morgan McCarthy and Desislava Obert. They noted that the fear of sell orders combined with a depletion of market liquidity could further intensify the volatility of the first cryptocurrency. Against this negative backdrop, Bitcoin has dropped by 8% since the beginning of August, despite a net inflow of funds into spot Bitcoin ETFs, while global stock and bond indices have risen by 2%, the experts emphasized. 6th news. CoinShares reported an outflow of $305 million from crypto funds in 1 week. Between August 26 and September 1, 2024, capital outflows from cryptocurrency funds amounted to $305 million, according to the 198th weekly report from CoinShares. Compared to the previous reporting period, when inflows into crypto funds rose to $533 million, negative sentiment prevailed among institutional investors, mainly concerning Bitcoin, whose price at one point fell below $58,000. The first cryptocurrency ended the month down 8.6%, while Ethereum fell by 22.2% in August. Experts believe the outflow was also driven by expectations of a 50 basis point interest rate cut in September 2024. Most digital asset investment products showed negative dynamics. According to the data provided, The largest capital outflows were from ARK 21 shares in Grayscale Investments, with $221 million and $143 million, respectively. Conversely, BlackRock's iShares crypto ETF attracted $219 million during the week. The outflow from Ethereum-based crypto funds amounted to $5.7 million. Despite the negative dynamics, trading volumes remained unchanged, CoinShares noted. Regarding regional distribution, the US, Germany, and Sweden experienced capital outflows, while other countries, including Switzerland, Canada, Brazil, and Australia, saw inflows. It is worth recalling that one of the largest outflows was recorded in March 2024, when more than $940 million was withdrawn from crypto funds in 1 week. 7th News. Organizers of Token 2049 announced a limited number of remaining tickets. From September 18 to 19, 2024, Token 2049, the largest Web3 conference of the year, will take place in Singapore. The event, held at Marina Bay Sands ahead of the Formula One Singapore Grand Prix 2024, will be attended by 20,000 participants from more than 150 countries, conference organizers told Encrypted. Given the scale of the event and the number of guests, Token 2049 once again confirms its status as the premier conference of the year in the Web3 ecosystem, according to a press release. The organizers emphasized that the conference has generated a great deal of excitement among participants planning to attend Token 2049 in Singapore. As a result, they strongly recommend purchasing tickets as soon as possible before they are sold out. It was noted that tickets for Token 2049 in Dubai, held in April 2024, were sold out several weeks before the event began. According to the conference program, this time Token 2049 will be attended by Formula One participants, pop culture representatives, Web3 company executives, artificial intelligence, finance, and technology leaders. The list of speakers includes such well-known figures as Max Verstappen, Oracle Red Bull Racing Formula One driver, Grammy-nominated artist Iggy Azalea, Blueprint founder Brian Johnson, Binance CEO Richard Tang, Solana founder Anatoly Yakovenko, technical specialist and former CIA agent Edward Snowden, entrepreneur Balaji Srinivasan, and many others. Compared to last year, the number of participants has more than doubled. All exhibition spaces were sold out a month before the start, which is a record result. We expect 20,000 visitors, and since tickets are selling quickly, we plan to sell them well in advance of the event. Our team is eagerly anticipating welcoming the global community to Singapore for our most dynamic and exciting Token 2049 exhibition, said event co-founder Alex Fiscum. As part of Token 2049, the debut Nexus startup competition will take place. According to the press release, early-stage crypto projects will compete on the global stage to impress thousands of visitors and a judging panel consisting of leading venture capitalists. Among the title sponsors of Token 2049 Singapore are the crypto exchange OKX, trading platform and official partner of Chelsea Football Club BingX, the Trondao organization providing decentralized trading opportunities, investor and market maker DWF Labs, crypto exchange BitGet, regulated digital asset exchange Bullish, and Web3 neobank Zebu, created specifically for telecommunications settlements. The organizers noted that Token 2049 in Singapore promises to be an unprecedented event that will turn the entire city-state into a hub of innovation. From September 16 to 22, more than 500 parallel events will take place as part of Token 2049, ensuring a busy week full of networking and collaboration opportunities. 8th News. Crypto investors are more supportive of Trump compared to Harris. Crypto investors in the U.S. support presidential candidate Donald Trump, according to a survey conducted by Fairleigh Dickinson University. 50% of respondents voted for him, while 38% supported his opponent, Vice President Kamala Harris. The survey involved 801 respondents and was conducted from August 17 to 20, 2024. The proportion of crypto investors in this sample was 15%. The majority of the remaining respondents, 80%, indicated that they had never owned crypto assets and did not plan to invest in them in the near future. Another 4% were unaware of what crypto assets are, and 1% were unsure how to respond. Among crypto investors, 50% supported Donald Trump. Experts attribute the growth of his audience to his efforts to connect with the community. Trump is reaching out to the crypto community, and it seems to have paid off. It would be easy to dismiss them as insignificant, but I do not think people realize how widespread crypto ownership is, said Dan Cassino, professor of government and politics. Notably, those respondents who do not plan to invest in crypto assets predominantly supported Harris, 53% compared to 41% for Trump. Previously, we covered betting on the outcome of the U.S. presidential election on the Polymarket platform. At that time, the probability of victory for each of the two candidates was 50%. When preparing this material, Harris had fallen behind Trump. The probability of her victory is now estimated at 48%. The total betting pool on this position reached $775.35 million. It should be noted that Donald Trump has made several statements in support of the cryptocurrency industry. In particular, he spoke at the Bitcoin 2024 conference.